I've been actively trading for more than 4 years now, and I still remember the time and the money I've spent trying to grow a small account into a big account. Because to be a good trader, you do not need a lot of capital and you do not need an overcomplicated strategy to make money in the markets. All you need is a one simple strategy that you can focus on. I can make anywhere from $200 to $1,000 a day with this simple strategy, but all of that did not happen till I started risking $50 to $80 and then slowly scaling my trading account. So in this video, I'm gonna be showing you the best system to start trading using only 3 simple confluences. And with those confluences, you can find the most probable setups that will get you the highest win rate. So let's get into it. Let's first understand why 95% of traders actually lose money and blow their accounts, especially the ones with a small account. So one of the biggest problem with that is going to be the fear of losing, which is going to start this whole loop that all of the traders are always stuck in. So the first thing after the fear of losing is going to be the need to make it back. So every single trader that is starting to trade or anything, they will always have a need to make back something that they lost in a trade. And the one that is going to follow the need to make it back is going to be to force bad setups, because they feel the need to actually make back the money that they lost. So what are they gonna do? They are just gonna force bad setups in order to get their money back. So that is just gonna make them lose even more money. Then another thing that they are gonna mess up is they are going to take the profits too early, because they are gonna be hesitant that the trade is gonna end up losing. They take profits and then the trade ends up running in the full take profit, so they miss out on a lot of the profits. And basically with that, they miss the big winners that are going to pay off all the losers. And with that, we are back to the start of the loop where they just kind of repeat everything again. And now that we got the psychology problems out of the way, there is also a strategy problem. So the first thing that every single trader does with a strategy, they execute positions, which is normal. Then after a small losing streak, so for example, they take 1, 2 or 3 losses, they think that strategy just is not working because they took few losses. So what they do, they end up changing the strategy, which of course resets the confidence, and then again to the square one, they start executing trades, and then sooner or later they are gonna get a small losing streak, and then back to the thinking that strategy is the problem. So this is really, I think, the biggest loop in trading, and that is why in this video we are gonna learn a simple strategy that is very easy to execute. So the first thing that we are gonna focus on is how to find the high probability stock to trade. And what do we mean by the high probability stock to trade? Basically the one that is moving clean and that is moving obvious. So what we actually want is we want the one that is actually not ranging all the time, which is just staying in the same spot and not giving us any opportunity to trade, but we want the one that is actually mostly trending to either upside or to the downside, which is actually going to cause us to catch moves either to the upside if we are uptrending or to the downside if we are downtrending, which is actually going to make us profits in the end. Because if we end up getting caught in the ranging, it's going to be very hard to make profits, but still with this model it's even possible to catch winnings in the consolidation. So for the stock selection, we are actually going to pick Nasdaq because it is going to be the best moving one and it is going to be the best for this model that I'm going to teach you today. Because the price action is very clear, you can easily see the highs and the lows and all of the manipulations that are important for the strategy. That is why we are going to pick the Nasdaq. The second thing that we are going to need is going to be the core system. So basically what we are going to use the most with this model is a really simple thing, and yet it's so effective when put correctly on the charts, and that thing is going to be the fair value gap. So more on this later, but it's really important that you understand that a fair value gap or an imbalance is going to be a hole within the first and the third candles wick, basically just leaving an imbalance in the market where the sellers or buyers were way too strong. So this is going to be really important, and we are going to come to this topic later on why this is going to be so important. And then followed by the core system, we are going to have the execution. So what does that mean? That means that we have to have the perfect execution. So when the setup comes, we do not hesitate, we do not think twice, we execute it and we let the results speak. And basically here you can see my perfect execution, so you can see all the wins, all the losses, and the win rate of this exact model. So now that we understand everything, let's actually get to the live chart so I can explain you what the strategy is and how do we actually execute it and what the exact steps are. Okay, so basically here we are at the Nasdaq chart. So you can see right here Nasdaq 100, and that is the index that we are going to be trading. So now let's go over the steps for the strategy. So the first step is going to be to understand where the market is headed. So how are we going to do that? We are actually going to just spot for what fair value gaps are getting respected, and we are going to spot where the market is making new higher highs or it's making lower lows. So for example, if we look at a chart right now, the first thing that we notice on the chart is that we are making lower lows and then lower highs. So basically what the market is telling to us with this is that the market is actually downtrending. And how do we know that? Because each time the market makes a low, it actually comes down and breaks the low, creating a new one. So the same thing right here, we make a low and then later on we actually break it and then make a new low. And also one more confluence that we are bearish is if we start marking our fair value gaps, you can see that we have a fair value gap right here that got respected and pushed the market to the downside. Then we got a fair value gap right here that got respected and pushed the market to the downside. So basically we have a pattern that is following itself. So now that we have the first step out of the way, which is knowing that market is actually bearish, which means we are downtrending and we want to look for the shorts in the market, the next step is going to be to wait for a manipulation. So now the rule for the manipulation is when the market is actually downtrending. So for example like this, in order for us to actually sell the market, so for example market is right now right here, in order for us to actually short the market, we want to see a manipulation in the market to the downside. So basically we want to see a manipulation in the market to the upside. So basically in this example, if we are right here in the market, so the same thing as right here, we made a pullback. What we want to see is a high in the market getting manipulated like this one right here. And what is the logic behind that? So basically all the people that are shorting market right here, then on this pullback they start shorting the market right here. What happens is when they short the market and when we got this manipulation right here, all the stop losses from this high right here actually got swept. And what does that mean for us? That means for us that all the banks and institutions that pushed and manipulated market up took out all the stop losses from this high, and now they can start selling off the market again and basically continuing the direction. And for example, if we are trading to the upside, so we have an uptrend exactly like this, what we want to see in the market is a low getting manipulated. So for example, this low right here needs to get manipulated like this in order for us to actually execute towards the upside and of course target highs to manipulate highs. So all we want to see when we know that we are either bullish, which means going to the upside, or bearish, which means going to the downside, we want to see a manipulation in the opposite direction. So basically now that we know that we want to see a manipulation of the high to then continue looking for the shorts, we are going to mark out the most recent structure to the upside, which is going to be this one. And then basically what we are going to do is we are going to wait for that manipulation of the upside. So now if we scale to the lower time frames, for example a 5-minute time frame, so we were marking out structure on the 15-minute time frame. If we basically right now wait for this manipulation, let's see if it is gonna happen. So basically you can see also the time, it's 9:30, so the market open, because we are trading Nasdaq, we want to trade a 9:30 Eastern time, which is going to be the New York market open. So basically right now we manipulated to the upside, and what the next step is, it is going to be to look for an entry model. So you can see right here the 3-minute time frame has manipulated to the upside and basically swept this high. So what we right now want to see, we want to see again a really smart thing with a fair value gap. So basically when we get that initial manipulation of the high to then short the market, what we want to see is going to be something really smart. So in this example, we want to see a fair value gap that got created while that manipulation was happening, that we want to see getting disrespected. So we have a fair value gap right here, and now what we actually want to see is for the market to actually come down and disrespect that fair value gap. Because what is that going to tell us? That is actually going to tell us that market does not want to respect it and go back to the upside, but it actually wants to disrespect it and continue going to the downside. So basically, if we right now look at the market, let's see what is going to happen. So if we mark out this fair value gap, let's see if it is going to get disrespected. So yep, disrespect is when the body closes below, and you can see a clear body close below the fair value gap. So all that we do right now is we enter short positions, we put a stop loss above the fair value gap on the body or on the candle or even on the high or the low, and basically we can target all the way to the downside. So this one is 2.3 risk to reward, and let's see how this trade is actually going to play out. So you can see it actually just skyrocketed straight to the take profit. And then also if you zoom out to the 50-minute time frame, something interesting is on here. So you can see that we actually beautifully respected this fair value gap after this manipulation and just made a new structure to the downside. So with this position, you could have easily grown your capital because it was positive risk to reward. It was 2.3 risk to reward. So if you risk $100, you would have made $235 on this position. So here we have another day in the market. So the first thing that we see on the chart, when we come to the chart, we see a high right here, then we have a low, and then after that you can see right here we broke this high to the upside, making a higher high, which means we are in an uptrend. Then after that we made another low, and then we also broke this high right here with a wick, which means there may be a manipulation. So right now we can see that we are in a clear trend to the upside. Also, one more thing that is going to tell us that we are in an uptrend is going to be a respect of the fair value gaps, exactly like this. So basically, if we are in a uptrend right now, that means that first we have to manipulate to the downside and then we can buy the market. So in this example, this right here is a lower low that we want to see manipulated, and now basically all we are waiting for is that initial manipulation of that low. So what we do is we scale down to the lower time frame, and now basically we just wait for that manipulation right here. And you can see right after 9:30 we actually got that initial manipulation. And basically also if we zoom out to the 50-minute time frame, what do we have right here? We currently respected this fair value gap. So right here this candle still didn't close on the 50-minute time frame. It still has about 7 to 8 minutes to a closure, so we are still respecting it because we can still easily reject to the upside and leave a huge wick. So right now what we want to do is we want to actually mark out the fair value gaps that we have to then of course enter the market. So we have this fair value gap, then we also have this fair value gap. Basically if we mark them out, we can wait for the disrespect. So the first one we are waiting for is the disrespect of this one, and if that happens we are gonna enter the market. So basically let's wait and see. Okay, so right now what happened is we actually disrespected this one, and then we also disrespected this one, so we can easily enter the market right here and of course target towards the upside. So we are gonna put our actual stop loss below these fair value gaps that we just disrespected, and then we can also target to the upside, and we can also target maybe 1 to 2 fixed risk to reward like this. So for example, let's see how this is actually gonna play out. So if I fast forward the market, you can see a beautiful take profit in like 5 to 6 minutes after the entry. And now if we zoom out to the 50-minute time frame, you can see exactly what I was talking about, how we were actually respecting this fair value gap because this candle did not actually close. Okay, so I hope you liked the video, but just before you actually leave the video, I actually want to give you something for completely free, which is, trust me, insane. But before I do that, if you like the video, make sure to subscribe to the channel. That is just gonna make you be able to see every new upload I do, and also like the video if you liked it. So the thing that I'm gonna give you is actually really limited. So if you go down there in the description, you're gonna see that at the moment I'm giving away my $500 course for completely free. So basically it's a limited amount of spots, so if it's still down there you are lucky and you can basically claim it and have it forever. So make sure to do that. Also, one more thing is, if you maybe want to get to work with me one-on-one, make sure to check out the form below the video to actually apply. And basically I'm just gonna see if you are a right fit for the mentorship, and if you get accepted you may get to work with me. So basically, with all of that being said, I hope that you liked the video, and I'm gonna see you in the next one. Peace.